All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at GDX, go over the gold miners. All right, we're getting a breakout and appears to be what is a retest to potentially go up higher. We'll go over all of that in today's video. We'll also go over an option strategy that you guys can look at and basically give you guys a little bit of information about how you can leverage the shares that you own to get free downside protection. It will, of course, take a look at the futures. We have to take a look at the futures in gold itself. If you're going to be trading instruments like GLD or GDX, gold is getting the pullback that we are expecting. It's coming up along support here as well. We'll see how it reacts over the coming week or two. GLD, we recently just had a short position on GLD and closed that short position for a very nice gain. You can see over 100% on those GLD put options. But we really need to talk about the relationship that gold has with the dollar and also with treasury yields. Okay. And so understanding these relationships will be able to help you understand the price movements and the market movements when it comes to gold and, the metals. Okay. So be sure to smash the like button, subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you're new to the channel, I did start a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas, free valuable finance content, free trading content every single week. Try to sprinkle in 1 to 2 free trade ideas, and this is what they'll look like, highlighting the chart conditions, showing you guys the chart itself. And many of these trades have played out very, very nicely. And the reason being is because we try to go for quality over quantity, right? So there's a rising wedge here. We can see, a bearish MACD. We can see the RSI losing momentum, going over all of these conditions on the chart here. And then you can see how that trade played out very nicely, coming down to the targets as we described. So if you're fans of free valuable content and free trade ideas, you'll really enjoy that newsletter. I'm not going to be spamming you guys 5 to 10 different stocks every single day and then bragging about how 1 or 2 of them hit. Again, it's going to be quality over quantity. Now, the first thing I want to really talk about is the relationship between the dollar and gold. So typically it has an inverse relationship. So this chart, you may be wondering what it is that we're looking at. Well, the price of gold futures is going to be in gold, and the price of the US dollar is going to be in green here. And so this is an inverse dollar chart. So this means that each time the green line is going up, what's happening is the dollar is actually going down. Okay, this is an inverted Dixie. Okay, DXY is the dollar index. So we can see here the relationship that they have that, as gold is going up, okay, the inverted dollar is also going up. And, it maintains that relationship. So basically, if you're going to be bullish on gold, okay, you're going to want to see the dollar fall, right? And so here we're seeing the inverse chart fall on the dollar, meaning that the dollar itself is actually rising, and we're seeing gold dropping. So it's no coincidence that, gold is dropping if the dollar is rising. And that was the whole thesis behind the short position on GLD here recently, was we were looking at the dollar and it looked like it had a potential bullish setup here. And so one way to something that would be impacted by the dollar going up was going to be gold. All right. And the gold chart looked like it also could break down. All right. You also want to pay attention to treasury yields. So right here we have the inverse 10-year treasury yield in white, and then we have the gold in yellow. And these gray shaded areas here, these are areas where there's been a little bit of a divergence. We can see gold going up a little bit higher here. And we can see the inverted treasury yield falling here. But most of the time, it's very similar to the dollar where you're going to see the inverse, right? So here we see gold going up and we see the inverse 10-year treasury yield going up, meaning in actuality that treasury yields are going down. So get that simple concept of inverted, it's inverted just so you guys can see the correlation better, right? Where it's trending down, bounces, bounces, trending down, and then we had this period here too, right, where we can see the inverted 10-year treasury yield is just really rallying. And this is actually meaning that treasury yields have been falling and the dollar has been rallying very, very well throughout that period. Okay, so you want to pay attention to the dollar. You want to pay attention to treasury yields if you're going to be trading something like gold, GDX, GLD. Those different types of instruments are going to be generally impacted and have a general inverse relationship to gold itself. Now, let's take a look here at the gold futures on the weekly chart. And the analysis has been playing out very well for gold. It's been tracking pretty well. Originally, we were looking at this five-wave structure to the upside, and when everyone was extremely bullish up here and saying to buy, this is when we were looking to sell because we knew we had overhead supply from the back, right? A double top. We came up here, formed a triple top, and this was also the wave 5 target to the upside, at which point we were looking for an ABC correction to the downside, right? And we did get that ABC correction. We came over here and we got a nice bounce off of our 200 moving average on the weekly chart. Now, the markets tend to move in 3 and 5 wave structures. So the 5-wave structure is your bullish count. And then being that this is an ABC right here, your 3-wave structures, those are typically your corrections. So we got a, bullish count here, followed by a correction, and it appears that we're in the process of potentially forming another bullish count here at the moment. Now, what we did was we pulled back, okay, after coming here and, breaking out of the triple top, which, if you've been watching my gold videos or you guys know me about my stance on gold, I did think that we were going to break this triple top and make new highs, which that's what we've done. And, we've started to get a pullback. And I mentioned that, hey, we're going to be looking for it to potentially come down to this 1989 level, right? And that's right around where we're at right now. Okay, 1995 at the time of this recording for this screenshot. And so now it's really, really interesting to see, hey, are we going to bounce here, right? And potentially get that move, break through some of our recent highs and potentially come up to 2250. Okay, 2250 is going to be my ultimate bullish target for it right now if we are to come out and make new highs. But at the moment, what we really need to do is if we see if we, find support. So below 1989, we do have 1950 and then 1902. We can pull back further, right? And those are all healthy levels of retracement. And if we break 1902 and basically flip 1900 from resistance to support, this 200-week moving average is going to continue creeping up, and there's a small gap down to fill right around 1850. So, that's some of the things that you want to, pay attention for, be cautious of. And if we were to lose our 200-week moving average, that could be, the start of a potential downtrend, right? If we take a look at GLD on the daily time frame, so zoom in a little bit out from a weekly, here's that same overhead supply zone. All right, we came up. And here's our trend line right here. And so we talked about gold in the Discord saying, hey, we're right here. All right. It was very close to potentially breaking this trend line. And we have 3 gaps down to fill. We just filled the first gap. And that's when we closed our position on the shorts for GLD. Once we got that gap fill, all right, just to take profits and, no reason to be greedy, that trade already went up 100%. Now we're holding support so far right around 183. Below there, we have 180, and then we have 177.54 and 173.48. Okay, now keep in mind there's 1, 2, 3, and even a 4th gap down to fill. Now, the thing about these gaps is that they do tend to fill about 90% of the time, but the big question is, when, right? Sometimes these gaps they fill in days, weeks, or months, and sometimes they even take years to fill. So, if GLD was to break below 163.30, okay, and we basically flip that area from support to resistance, that's when the odds increase of us, starting a bearish trend and heading down to 152.10. For now, we're approaching support just as we looked at on the GDX and the gold futures chart. And, we're just going to wait here and see, do we potentially start to find some support and can we potentially rally? And to do so, we need the dollar to drop. Now, there's lots of catalysts this week, whether it's the Fed, whether it's inflation data. Okay, then we have quad witching on Friday. So there are a lot of catalysts right now, and the market should be, pretty volatile. So I'm expecting a lot of volatility in the market, and you want to pay close attention to what the dollar is doing and treasury yields are doing, as I just described their relationship with gold. Now, if we were to take a look at GDX here, very similar to all of the other charts, it's approaching support right here at 2887. All right, we recently just broke out of a downtrend, and we're looking to see if we can bounce here and potentially head up higher. Now, there's a gap up here just above $36 and a gap up here just above $40. And then also, of course, one to the downside. Now, we're much closer, a little, not much closer, but, if you look, we're basically, halfway in between the gap up and the gap down, but we've got 2 gaps up to fill. So, you know, we're going to see if we can get the breakout retest and hold right here. That'll be a good sign. If the futures can hold their support, if GLD can hold its support, then potentially GDX would be able to hold its support here as well. All right. But if we wanted to, let's say we were wanting to start a position here, right along this 28.87 support level. One thing that you could do if you're buying 100 shares or more is you can come in here and you can go to the September 2024 expiration. And if you take a look, the open interest is really high at this strike right here with over 15,000, and that is going to be the $38 strike price. Now, the $38 strike price is above this gap right here. Okay, so if you own 100 shares, what you can do is you can actually come out here and you can sell this $38 call strike. Okay, and what that means is that if the price of GDX is above $38 by September 20th of 2024, you're going to be forced to sell your shares at $38 a share. Now, entering here right around that $29 level, that's a pretty good gain. That's around 30%, right? 9 over 29 is basically almost 10 over 30. Okay, so roughly 30% gains right there. So, 30% gains in like 280 days, that is a very nice return. So, even if the price goes higher, which is the upside risk, okay, because you're limiting your upside potential. Let's say GDX fills the gap up in the 40s or it runs up to 45, or let's say even 50, you're going to be forced to sell your shares at that $38 strike price. So that's one thing that you do have to be careful of and be mindful of anytime you're selling some type of options, whether it's selling puts, right? You have to be comfortable owning the share price. And if you're selling calls, you have to be comfortable selling the share, at that price, even if it's above your level. But really what we're trying to do here is not shoot for the moon and make 100% gains. What we're doing is we're trying to minimize risk. So if we sell that covered call, okay, you can get between $80 and $90. And if you were to come over here and take a look at the January 26, 2024 put options, you can buy the $28 put for around $80. Okay, so that means that you essentially would be able to sell this covered call here, the 38 strike, right? Receive about $90. $80 to $90, and then you can take that $80 and you can come in here and you can buy the January 28 put. Okay, so what we're doing here is we're basically hedging ourselves without having to spend extra income or extra capital, right? We're leveraging the shares that we own. All right, selling the 38 strike covered call and then using that credit that we receive, that premium that we receive, to buy the $28 put. Now, why are we buying that $28 put? Well, the reason being is because we're entering in right around support of 28.87. And we know if we flip, basically 29 to resistance from support, we could head down to 27. And there's also even a gap down to fill below $24. So if gold or GDX was to have an extremely bearish month, okay, and things were just going to continue dropping lower, if the price is below $28, you would be able to sell your shares at $28 a share. So let's say, in the next 3 or 4 weeks or 5 weeks or so, GDX collapses and it's at $26 a share or it's at $25 a share. Well, you can sleep a little bit better at night knowing that the, $29 strike, that you got in around $29 and that your max risk for the next 45 days is only going to be $1 a share. So, this is a really good way to limit risk, right? And manage risk and basically define, hey, well, what price am I comfortable at? Selling at, just in case things go to the downside. Now, you don't have to sell covered calls to do so. Okay, you can just go out there and buy puts as protection. Okay, so if you were to spend buy 100 shares, that'd be about $2,900, and then for about $80 or so, you would be able to buy the $28 put. And that would give you protection to the downside. You don't have to execute the put option either. You can always take profit on those, right? So if the price of GDX was to go down to $27 by the time of this expiration, those contracts would be worth roughly around $100, right? If it was to go down to $26 by the time of expiration, those contracts would be worth around $200. So, you can choose to sell that hedge for a profit, right? Or you can choose to execute those options, if they are in the money, again, as a hedge to manage your downside risk. So, that's not a strategy that I'm running at the moment. I'm not in GDX and I'm not in gold currently at the moment. As I just showed you guys, I closed a short position. And now I'm just, kind of looking and, evaluating some things. And I kind of just wanted to express and share, this, basically this option strategy. And it's not something that's limited to just gold. This is something that you can use moving forward to say, hey, well, what's a good way where I can minimize my downside risk? You can choose different expiration dates. You can figure out things that work for you. This is just one example right here. Now, if you enjoyed this option strategy analysis, this gold analysis, feel free to go on over to my Ko-Fi page using the link in the description, and you click on commissions there, and you can book a 30-minute or a 1-hour personal session. I do these one-on-one sessions all the time. You can also request a YouTube video on the specific topic of your choice, or click on this buy a coffee button basically as a way to leave a free a tip or donation for the free valuable content I do put out there, such as that newsletter. Okay, so sign up for the newsletter using that link in the description below. That's where you can get that free valuable trading content, free valuable finance content, and 1 to 2 free trade ideas a week. And if you want to, you can join the Investment Intelligence Discord. It's only about $10 a month, so less than a cup of coffee a week. And that's where we just recently closed yesterday this GLD short position for over 100%. And you get access to all of the different trade ideas, analysis, resources, and many other things as well. So appreciate you watching. Smash the like button, subscribe to the channel for more.